Okay. Good morning, everyone. Thank you for hosting me here. So we're going to make a introduction into liquid restaking before the panel that will be right after. So I guess most of you already heard about Eigenlayer and what it is. So I'll try to be quite brief about Eigenlayer and to deep dive a little bit more into liquid restaking, where it can be a bit more confusing for some people because there are definitely some differences when compared to ETHLST. So Eigenlayer first is a marketplace for decentralized trust. So if you are a middleware, it's going to be very challenging if you're innovating in the space to acquire trust, because maybe your revenues are not necessarily so high, and then it's very challenging, for the last few years to, let's say you want to compete with Chainlink, with the Oracle, and you want to acquire trust. So the first attempts we saw was you come up with the token, you need to inflate the token, right? Give additional rewards to try to attract trust. And then you realize that your revenues are not picking up as fast as you wish. And then you realize that that's going to be very challenging, right? To come up with some decentralization and acquire trust. And the main innovation of Eigenlayer, and that's why so many people are excited about that, is you can actually, whatever revenues you have, you can just basically borrow that trust, which is basically restakers of ETH, meaning you just receive additional rewards on top of the ETH reference rate, assuming that ETH reference rate is ETH staking rewards, plus the MEV that became kind of the norm for most of the ETHLST protocols. So obviously that allows innovation to happen much faster. Anyone that has a new idea can compete with Chainlink and others that are already established middleware players in the space much faster. And yeah, that's really the open innovation that Shriram, the founder of Eigenlayer, was I guess aiming for. So these rewards, basically, they come by actively validation services. So you have now multiple protocols offering these services that we can see right after, a few examples of it. And those ones are going to offer services then to middlewares, layer twos, and so on. So that's one of the main benefits. Before that, I think it's very relevant to explain how you can restake. So there is mostly two ways to restake. One is what Eigenlayer is calling integration under the hood, and another one is over the top. So under the hood, it means native restaking. So you run a validator node with 32 ETH. You can then create the eigenpod, which means you need to set the withdrawal credentials of your validator nodes to the eigenpod so that Eigenlayer can slash you if anything happens. And then you need to pick an Eigenlayer node operator. So you can only select one by eigenpod, at least for now. And then you will be eligible to earn additional AVS rewards. But here, the Eigenlayer node operator is the one selecting and opting into the AVSs. So you as a restaker, you cannot directly pick the AVSs. So I think the most easy analogy to use for this is, imagine you want to invest in equity, and you can basically do it in two ways. You can do stock picking yourself, or you can decide to invest in an equity fund that is going to do some stock picking, and then you like it or you don't. If you don't like it, you just select another equity fund. So that's important. The restaker cannot pick the AVS directly. It's the Eigenlayer node operator that picks the AVS for you, and they can select one or multiple ones. If they do multiple ones, that's obviously why this is called restaking, right? The second way to restake is through ETHLSTs. So there is currently 12 LSTs being supported, so such as Lido, Rocket Pool, Stakewise, Binance ETH, Coinbase ETH, Anchor, Stader, Frax, Liquid Collective. Not trying to forget anyone. If I do, sorry. And there is also Origin ETH, which is actually an ETHLST pool. So technically, Eigenlayer is not limited just to ETHLSTs. It is also technically able to support other things than ETHLST as long as it is available on Ethereum. So Origin ETH, which is a ETH LST pool where you earn additional swap fees on top of ETH LSTs, is one that is already being supported, but you can pretty much foresee that BTC LST is available on Ethereum could become eligible in the future, and that's actually something I discussed at ETH Denver with Shuram, and it did confirm that this is a possibility as long as it is available on Ethereum. So in terms of the market, I think it's pretty interesting to observe that in about a bit more than 3 years of ETHLST, right, after its creation, we have about 43% of all ETH staking that are in ETHLSTs, but in about 3 months of Eigenlayer, there is already 56%, right, of the LRTs that, I mean, LRTs are 56% of the market share of Eigenlayer, and it's growing pretty fast, right? LST market share is currently about 51 billion, but Eigenlayer is already 12, and it's still it is in infancy, right? So in April, we are expected to see on mainnet the ability to actually pick an Eigenlayer node operator, because that part is still on testnet. So it is an evolutive protocol, meaning that right now you can really just set up an Eigenpod and deposit ETH or LSTs, and that's it. In April, you will be able to then select a specific Eigenlayer node operator that is selecting, opting into some AVSs. So then eventually you might get some AVS airdrops or whatever. But slashing will not be enabled. So this is still something that will come only at a later phase. And even if that happens, there will be a Eigenlayer committee that might actually, protect you from slashing. If there is a bug in the code, that might be one of the circumstances where the committee can actually veto the slash, right? So it is still, going to happen in quite some time. And yeah, so in terms of the future, my personal opinion is Eigenlayer is definitely going to be bigger than ETHLSTs. Why? Because institutions are still kind of not actively, participating in Eigenlayer. It's still super early. It's only 3 months, right? It's not 3.5 years almost like ETHLSTs. And for Eigenlayer restaking, it's also very modular, meaning that people can get afraid about the additional slashing risk you're going to get involved to if you restake by opting into many, many AVSs. However, as an institution, you can also opt into one single AVS, right? So it's very modular, the type of risk you want to opt in or not in the end of the day. And I think, yeah, this is definitely going to grow in the future. In terms of the use cases, I'm not going to deep dive too much into it so that we have time to go deeper into the LRTs, but those are the, let's say, official use cases that Eigenlayer identified. So those AVSs, right, they will be offering services. I think one big challenge is, are they going to receive organic clients, right, that are going to pay rewards to those AVSs? Because these AVSs, they need to borrow trust, right? And they will have most of them a token, obviously, so that will give some incentives. But we need to see, right, if then some organic, clients are going to come. So far, the rollups that announced that they will be using AGND8, which is one of the, the first and the main data availability layer AVS service. There are other ones, so each one is offering specific services like decentralized sequencing for Espresso. But yeah, basically, as I mentioned before, the node operators, they're the ones picking the AVSs, one or multiple ones, and the restaker then will pick the node operators. Now about liquid restaking, it's interesting because when you want to restake natively or restake your LSCs on Eigenlayer, there are benefits, additional rewards, but there are also some limitations. So you will be subject to an additional 7-day unbundling period, and then you kind of lose your composability, right? Because then you need to choose between yield farming these LSTs or restaking your LST on Eigenlayer. So that's where the innovation of LRT comes. So to my knowledge, there is about 20 to 30 LRT protocols, on testnet or on mainnet. And why is it so, so popular? Because you don't really need to choose, right, with LRTs. So if you deposit your ETH or LSTs into a liquid restaking protocol, they're going to restake for you on Eigenlayer, and they're going to give you a receipt token, which allows you to get secondary market liquidity for the LRT. So if you don't want to lose, to wait 7 days to unstake from Eigenlayer, you can just sell the LRT token in DeFi. And composability is also important because then you can continue to yield farm, potentially your ETH LRTs and earn additional rewards. So we saw the same 3 years ago, at December 2020, when you could be able to earn staking rewards on top of ETH. You had to deposit 32 ETH, be a validator, but then you're kind of losing your composability. At the time, you had many ETH yield farming rewards, right? You had to choose between both, and then ETH LST came up, and now it's the same with LRT. However, there are significant differences as an additional complexity with ETH LRT, and as a protocol, the things that you need to manage. So there is obviously additional slashing risk. So what is the risk mitigation measures that you're going to take as a ETH LRT protocol is pretty relevant. Also, not all AVSs are equal. Some AVSs might have super friendly slashing policies. Others might have less easy slashing policies where they will slash you depending on whether you meet certain requirements or not. And then you need really to see if the token that you're going to receive, right, is going to be ETH. If it's ETH, it's easier to auto compound. If you're going to receive some new token, you need to assess, is it liquid? How easy can I sell it or not? And then you need to potentially self-limit yourself, because if you are getting 50 AVS rewards, right, in 50 different tokens, how do you compound this? It's going to be challenging. So then are you going to decide to self-restrict yourself into picking, let's say, only 7, AVS, and then you're okay to auto-compound this? Or are you going to decide to come up with some different mechanism for the distribution of rewards? So these are all still open questions, right? And I don't think any ETH LRT protocol specifically takes some commitment, right, into how they're going to do it, because it depends on EigenLayer also what they're allowing you to do or not. There are currently, this is what our venture studio, Tagos Labs, classified like 3 types of LRTs, which is different than LSTs, where they're mostly very similar, but here there are actually significant differences in terms of risk that you are taking. So the first one is native LRTs. So that one will be the same as ETHTaipei, which is the biggest one so far, or Genesis LRT, for instance. So the native LRT is really, you get the ETH. Fundamentally, you're like an ETHLST protocol. So you need to pick some validators, delegate the validation keys to them. The extra step is that you need to create one or multiple eigenpods to delegate to one or multiple eigenlayer node operators, opting in to one or multiple AVSs, right? So level of transparency here is, I will say, pretty high, because it's really native ETH. You don't face additional counterparty risk, so you're not going to take the risk of Lido, Rocket Pool, or any other LST. The second one is what we call isolated LRT. So that will be like EigenPi or Inception LRT, for example. So those ones tend to be very friendly towards LSTs and very transparent and predictable in the way that they're basically telling you, okay, deposit any of the 12 LSTs on EigenLayer, and I'm going to give you 12 different isolated LRTs depending on what you deposit. So if you deposit STETH, you're just going to get isolated LRT of STETH. So that means you want to continue to trust Lido to get beacon chain rewards and MEV, and then you're just trusting another protocol to handle the restaking part. Because for LST protocols, most of them except Swell that didn't do their TGE are not creating native liquid restaking. Because when you have a liquid staking protocol with hundreds of millions of TVL or even billions, creating a second product is a bit challenging, and you don't really have the incentives to do so, because if you have ETHLST and you create then ETHLRT, imagine let's say Lido will do it. Well, that Lido then doesn't really have much incentive, because the TVL is going to be the same. It's just going to observe a transition of the TVL from product A to product B. And in the meantime, it's more advantageous for them to just wait and see. And maybe other protocols like Inception and EigenPi, once you build on top of them, they will capture a second TVL layer, giving us value to a second token, and that will allow them to be more competitive in the space, right? And the third one is what we call basket-based LRTs. So those ones are, I will say, the most, let's say, disputable in terms of risk reward because they allow you to deposit any ETH-LST or ETH as well. And they're just going to give you, however, only one receipt token. So here you're facing multiple counterparty risk. However, you're not earning additional rewards when compared to the two other LRT types, because you're not able to earn, for example, swap fees like in the case of Origin Protocol, which is a LST pool, meaning you have multiple LSTs in the basket, but you can earn additional swap fees. So that's not the case for basket-based LRTs because you cannot swap something that is being restaked, right? However, isolated LRTs might eventually evolve through partners or themselves by enabling a second product, which is AMM baskets. And then they can actually allow people to trade those isolated LRTs and so on. Personally, I think the risk-reward ratio will make more sense for AMM isolated LRT basket than the basket-based LRTs. So those ones are mostly Kelp and Renzo, even though Renzo is mostly native, but they also have STETH and Binance Ease. That's the competitive landscape right now for the main ones. So residuals, be careful with that. Most of the LRTs do not allow you to unstake, except a few ones like ETHTaipei, Genesis, Inception, Restaking Cloud. So if you participate there, sometimes you don't have like a mention that you cannot unstake. They will then just tell you just sell it on the secondary market, and then you need to check if you have secondary market liquidity or not. So be careful about that because it's still it's infancy, Eigenlayer and LRTs. And yeah, in terms of the biggest opportunities, I'm just going to highlight one. In the restaking panel, I think we can discuss about more opportunities, but I think one of the biggest one is the layer twos. So if you compare L2Bit TVL with DeFi Llama and how many ETH you have on each layer 2, you see that on Arbitrum, ZK Sync, or Linea, you have actually more ETH than the total TVL accounted on DeFi Llama, meaning that there is many ETH not being actively deployed in DeFi applications on these layer 2s. And they're pretty much worried right now about Eigenlayer because this is definitely something that will likely be very big. And this is putting you into question. Do you want to keep your ETH in Linea or do you want to put it into Eigenlayer? And those ETH can pretty much leave those layer 2s very quickly. So they're all very excited about ETH LRT because it's ETH LRT on a layer 2 is the opportunity to give you exposure to Eigenlayer and the layer 2 of your choice. And obviously then you still have the composability benefits of applying your ETH LRT in DeFi applications on layer 2s as well. So that's it for this introduction about liquid restaking. Hope you appreciated it. About my background, so we're really a venture studio focusing on LRT-Fi. So any protocol doing liquid restaking, we're willing to capture TVL from liquid restaking tokens. So we advise, we co-build to help these protocols basically benefit from this new wave that is restaking. Thank you so much.
Thank you, Philip. And next stop, we're going to have the restaking panel in a bit. So yeah, just setting up. This is our restaking panel. Panel host is Ivan Xu. All right, take it over.
Doing? My name is Evan, and I'm going to be the host of today's panel. Welcome, everyone. So for today's panel, we have a distinguished panelists. That's these might be innovators. These guys might be real experts, and we're really going to be focused on not only diving deep into the opportunity in this space, but also address some key challenges that might be arising, as well as just the general future and how it's going to be impacting the Ethereum ecosystem. So why don't I start by having our panelists give a quick introduction. You guys can also talk about maybe what protocol you guys are building briefly, and as well as maybe what company you guys are working for.
Hello again. So my name is Philip Gonçalves, founder of Tagless Labs, LRT-Fi Venture Studio. Currently, we're actively building two LRT protocols. One that is native LRT, Genesis LRT. Second one is isolated LRT inception, and a CDP protocol as well, which is originally a fork of MakerDAO with the omni-chain savings rate, because it's also important to build DeFi on top of the reference rate of stablecoins. So that one is Davos, and also advising a few other projects, namely one that actually is going to testnet today. It's called the Strum. It's doing BTC liquid staking on top of Lightning Network.
Guys, my name is Maya, and I'm leading marketing for Redstone Oracles. At Redstone Oracles, we are modular oracles, the quickest growing on the market right now. We specialize in LSTs and LRTs, and that's why I'm here on the panel today. And right now, we are securing 100% of the LRT market.
Good morning, everyone. My name is Michael Kisselgoff. I'm the founder of Vaultcraft. Vaultcraft is a DeFi infrastructure that allows you to deploy custom DeFi strategies, automated DeFi strategies within a few seconds. We're built on mainnet EVM, soon to be Solana. I've been in crypto since 2016, and Vaultcraft is my second venture. Started my first one in 2017. Have a finance background as well as economics. Worked at Credit Suisse and SAP in corporate strategy. And yeah, now I got sucked into LRTFi.
Awesome, awesome. So I guess to really kick off this panel, obviously we discussed the overview of what problem restaking, liquid staking might be solving. I want to dive a little bit deeper on sort of the value that's still providing to the overall ecosystem. So just to start, besides token incentives, what kind of value do you guys think restaking, liquid staking has for the future of Ethereum?
Yeah, I can take that one. So I think the main advantage is obviously maintaining your DeFi composability, but I think there is more like complexity with EigenLayer than with ETH staking itself. So I think really managing this risk complexity and basically trusting the risk mitigation mechanisms of the LRT protocol, it's really a way to get these additional rewards in a way where you don't really need to go through this additional risk assessment and understanding all the AVS exposure you have or not. And I think that's one of the biggest benefits that it has. And maybe that's why in the presentation before, we saw that the market share of LRTs versus EigenLayer is so high, 56% so far. And for ETH LSTs on ETH staking, it's 43%. I think this difference might be partially justifiable because of that additional complexity it's actually solving.
Yeah, I mean, I have two thoughts on what's happening with liquid restaking tokens. So I think LRTs are like one spoke of the wheel for EigenLayer and what that actually like opens up for what's going to happen in the EigenLayer ecosystem. It's essentially, I mean, just to like back up for a second, I mean, EigenLayer is a way that you can abstract away from the decentralized and trustworthy nature of Ethereum. So LRTs are kind of just like this one element that provides sort of like access to Ethereum's decentralized trust. There's going to be a lot of other applications that are built on top as well that you'll be able to concatenate with LRTs. So I think that's like a very big thing. And then the second thing is that I don't see why most of the staked ETH or most of the TVL naturally moves over to EigenLayer because of the incentives that it offers.
Yeah, I think I agree with the speakers. What I personally value in restaking is, let's say, trust efficiency, if you can say that. So repurposing the trust, and for the restakers, they can have additional yield than just staking ETH. And on the other side, what we are as an Oracle interested in is actually gaining that additional security. And I can't say much right now, but we are exploring, and it's very interesting topic for us.
Yeah, so one, you guys are saying, you're utilizing some of the liquidity that's not being, that's underutilized right now. The second, I kind of imagine how, AWS, Blockspace, these guys are really helping, fast track some of these startups that are trying to build in the blockchain space. So it would be Eigenlayer that's really helping protocols launch really quickly. That overall, to me, it resonates that long term, this is gonna accelerate some of the crypto adoption that we're really looking for. So in terms of maybe let's talk about, obviously this is exciting, but there's some sort of risk that's involved. Let's talk about maybe starting with the underlying systematic risk that Vitalik had highlighted last year. What are you guys? What are your thoughts on some of that risk that he had addressed? This is like overloading the consensus mechanism, giving too much responsibility to the validator. So I just want to hear everyone's thoughts.
Yeah, I remember reading that blog post. So I personally think it's a net positive what Eigenlayer is doing. I think the risk or the benefits outweigh the risks. But theoretically speaking, because of what Eigenlayer can do in terms of how many new applications that can be built via Eigenlayer, that definitely lends itself to providing more congestion to the network and having sort of a negative impact. But I mean, I don't think really anyone knows how exactly this is going to play out in a few years from now, since this is like super early. But I think that congestion, then also let's say you are a AVS and you run into some issues and you want to fork Ethereum to solve your issue. I mean, I think leveraging basically the social consensus of Ethereum might be a problem, but I don't think it's that high of a risk.
Okay, so maybe let's activate the audience here. Who doesn't agree with Vitalik about overloading consensus? Okay, right. You see, so I think it's
Nobody wants to
It's a hard
challenge
question.
Vitalik.
So I think it's really hard to disagree with Vitalik, and like the risk is there and it's quite realistic. But I guess I think Eigenlayer for now they have security first approach and they are doing everything gradually and with consciousness. So I think that's the only way to move forward, to be aware of this risk and act accordingly.
Yeah, I think it reminds me also about ETHLSTs. I don't think like Vitalik or Ethereum Foundation has been very excited to see, ETH liquid staking rise because obviously it poses some, risk challenges. I think their approach with the Galarian restaking has been much more open because they understand they cannot really stop it. It's just like the nature of people that just want to get additional rewards and more options, even if they're taking more risk. And it doesn't really matter for them, if this is better for the greater good in terms of the risk of Ethereum or not. So I think there is that dialogue. Honestly, I even think that Eigenlayer has been a great active player, whether we like it or not. And I think Ethereum Foundation should be probably happy the way they manage the caps for ETHLSTs, because if they didn't have any caps on ETHLSTs, everyone will have restaked their ETHLST, right, from Lido, for example. And now we see that there is the emergence of so many ETHLRTs, right? There is even probably more ETHLRTs already trying to do something than ETHLSTs. So this is redistributing a bit the cards of staking, and it's actually contributing in some way also for more decentralization. Even though it's still concerning, right? The Dingle layer probably will be bigger than Lido. It's still a concern. But I think they really tried their best to accommodate with the, let's say, fears, I guess, from Ethereum Foundation. And it's a very interesting redistribution of cards we're seeing. But this is greatly supported by Eigenlayer. I'm not sure if they should be playing that, right, to remain neutral, but that's just how it is. We'll see when the ETH LST caps will be removed.
Yeah, so I want to take a step further and talk about maybe we address some of the challenges or risks. Maybe thinking about how can you guys like what strategies or what thoughts do you guys have on mitigating some of that risk? Like, is there any particular protocols that are really aiming to solve that? Because like I'm thinking, you got smart contract risk, you got slashing risk, you're stacking staked ETH, and then you're stashing, all these different layers, and these layers can go infinitely depending on what the protocol really depends on. So I just want to like kind of understand, starting with you guys to address some of that risk.
I think I can put it in context via what we're building at Vaultcraft. I mean, as soon as I understood what Eigenlayer was, I started thinking like, how do I deploy Vaultcraft, which is at the infrastructure level very complicated, let's say, and how we built. I think there is a good probability that complex primitives are eventually built on top of Eigenlayer, which will, I think, increase the risk and as well as the congestion of the network. I think there's we're kind of already seeing it play out with all of these rewards that are being, and this is like in a very simple way in terms of how Eigenlayer is being used right now. I think the complexity is going to come later, which is risky. And I forgot about the second thing I was going to say.
Yeah, I think about the slashing risk, like how they're going to mitigate slashing. There is like multiple ways to do it. I will say three come to my mind right now. The first one, it might be diversification across multiple node operators. So for that one, some LRT protocols, they are running nodes themselves or plan to do so, because that gives them a bit more power, right? Oh, I have 3 billion TVL, and you talk with an AVS, and you're like, hey, how much security you want, right? So those off-chain conversations are honestly already happening. And if you want to have that direct dialogue with the AVS and basically negotiate off-chain how much security you need, I can give you that much, but I need that much rewards. I think it's an interesting dialogue because there is no really market discovery mechanism because we're so early. But I think those things ultimately, they will need to happen like on-chain. And if you want to have the dialogue, you need to do it either by you run your own node operator, or you need to have a node operator that just follows your AVS strategy as a liquid restaking protocol, and they need to consider you as their like biggest client, and they're just going to do whatever you want in terms of AVS selection. So I personally think having more node operator diversification is better as a LRT protocol to reduce that slashing risk. I will say the second one is DBT technology from mobile and SSV when they come to Eigenlayer, which I trust they're already building that. So it will come sooner or later. That will reduce slashing risk for sure. And I will say the third one, it might be on-chain slashing insurance protocols. So for example, Nexus Mutual, I personally believe that they didn't really have much success because they were trying to basically provide insurance, but fundamentally they were trying to pay insurance on top of ETH and DAI, which is, they were assuming that the reference rate of ETH and DAI was 0. Now with positive interest rates, we realize that the reference rate of DAI is not 0. Now they increase it to 15% actually, because DeFi yields are higher than TradFi as of like the last couple of months. And ETH, the reference rate is ETH LSTs. So I definitely think there will be, insurance protocols that will be dedicated to LRTs, and they will be paying an insurance premium on top of ETH LSTs to protect LRT users against slashing risk. So I think that's the three measures we can do about the slashing that will be helpful for the ecosystem.
So what do you guys think about concentration risk in general? Like, the problem is that everyone is looking to deploy some of that staked ETH into Eigenlayer. How do you guys, first of all, do you guys think that's going to be a problem? Second of all, like, how do you guys think, what's the best move moving forward to kind of like address that centralization risk?
I think like Eigenlayer is like the itself is the main cause of decentralization. Again, it's just a set of smart contracts secured by multi-sigs. So I think that's why Shuram is also saying he's aiming to be kind of part of Ethereum long term, because yeah, then if you're comfortable about the Ethereum foundation, right, being able to do certain things on Ethereum, then on Eigenlayer it will not be different. So if they achieve that kind of evolution, yeah, in that case, I think actually that's with ETHLRTs there will be much more diversification and so many infinite possibilities to get different AVS exposure that it's actually going to contribute for more decentralization in some way. But right now, the biggest concern is Eigenlayer itself being a point of centralization in the short term for Ethereum.
All right, all right. So maybe let's switch a little bit of gear. We discussed the challenges. I want to hear what are the current exciting opportunities, maybe potential trends, narratives, or even protocols that are doing a really good job in this space.
I think the app-specific chain aspect of what Eigenlayer allows is going to become very interesting, especially, let's say, a year from now. I mean, I can talk a little bit about like what we're looking or exploring to do for Vaultcraft and in terms of creating our own restaked rollup. So we literally leveraging like LSTs to create our own app-specific chain. And the ability to do this and the different, I guess, like access points via alt layer, or I think perhaps Dimension is doing something similar in terms of like roll-up launchpads. I think, in 2017 when you were to launch a token, it was like a brand new, great, cool new thing. It was pretty easy to do. The fact that you can launch your own roll-up right now and be sort of in control of your own destiny, more so in like fee structure, that's something that's like very interesting for us. And the fact that you can actually even do that very, very easily, obviously if you have the engineering capabilities, is basically groundbreaking, and it really hasn't flourished yet. So think about what that looks like 1 or 2 years from now when you have many more applications like Vaultcraft building their own app-specific chain, and think about what that will do for Ethereum and overall for the decentralized and trustworthy nature of the network.
I think I would mention 2 projects here, 2 areas. So first of all, ETHTaipei, I'm personally a big fan. The native restaking they introduced, and they are doing really amazing job there. Another thing that also mentioned before, but that we are interested as an Oracle is restaking being used in oracles, and that we actually, how we imagine that is through restaking we can create much cheaper feeds, being even 5 times cheaper than the market solutions right now. So I think that's very exciting, especially from the protocols perspective, because protocols, they need to cover a lot of fees when it comes to Oracle feeds, and reducing the costs that much on monthly basis, that would be a big advancement.
Yeah, I think about the rollup as well. You don't necessarily need engineering capabilities if you trust rollup as a service. Companies like Caldera is also one of them. Even Anchor, I think they have an offering about that. But I think what opportunities, maybe switching a bit more into the LRT part, is, as I mentioned before in the discussion, the layer twos. So many ETH just there, basically not willing to be exposed to just another fork of Compound. And with LRT, it's a much more compelling opportunity. There is 4 billion of also STETH on Aave. So I think when LRTs get mature and let's say the market will stabilize into LRT protocols, give you an insurance premium of, let's say, 1, 2, 3% more rewards than ETHLSTs, then you will see definitely LRT loops happening, right? Basically, people collateralizing LRT and borrowing STETH, which increases the lending interest for STETH because nobody is really borrowing STETH in these lending protocols. So I think that's like very interesting opportunities that we will probably see, and that will give much more choices in terms of people earning yield. There will no more be just you get exposure to ETHLSTs or ETHLRTs. You can actually lend your ETHLST and you get some sort of yield in between. So I think that we will see much more diversity of use cases for ETHLRT, and yeah, that part. I think it's one great opportunity for many builders that want to build DeFi in that space.
Yeah, I'll just piggyback off of that, given that I'm a heavy DeFi user. The fact that these LRTs are tokens, and the nature of DeFi generally takes these tokens and puts them into money markets or whatever primitive perpetual protocols. This is something that's naturally going to increase in terms of volume, velocity over time.
Also, one big opportunity I think is ETH ETFs. So as you know, Circle, is putting these fiat right into short-term corporate bonds. They're not sharing right the coupons from these bonds with the end user in DeFi. So imagine if an ETH ETF is doing the same with some sort of white label ETHLST or even ETHLRT and keeping the yield for themselves. The opportunity is just too exciting for them not to do it, as long as the regulatory landscape in their jurisdiction allows it to do so. So I think that will be also like another massive opportunity, yeah, in the future.
So with more potential institutions trying to come in, I kind of want to talk about how do you guys see this space continue to evolve over the next 5 years? Obviously, 5 years in crypto time is almost like maybe 50 years, but I just want to get a better understanding of like how do you guys think this will continue to evolve? We talked about barriers, obviously, but I want to more focus on some of the opportunities.
So I don't have a clear answer. What I'd like to see in a couple of years is actually DeFi being more like regulated in a clear way, not SEC giving different opinions every other month. And still recently, I think I read the news yesterday that still investigating Ethereum as a security again. So I think we need clarity, and I think we need regulations which gonna give the users more safety, and maybe just focus on reducing the amount of rug pulls and hacks, not necessarily what's happening right now.
As someone that, let's say, deals with the institutional side, trying to get institutions into DeFi, I would say the problem with the institutions mostly exploring things out of just staking ETH is that there's smart contract risk. They just don't want to deal with it. And if they can just earn yield on ETH and long it at the same time, that's great, because you see what's happening with ETH. So it's just a great play for them. So if you want higher returns because you want higher risk, that you can go into DeFi. But ultimately, with everything that's happening, let's say in the West, and the regulatory unclarity there, and how I would say more of the capital that is being deployed is on the Asian side. I think there's definitely this geographic kind of like shift that's happened over the last year and will continue to go on, depending on whoever wins the election or whatever the political landscape is going to be in the US after this year. But we're definitely discussing institutional involvement in EigenLayer on a stage, probably one of the first conversations. Like this is super early. I hope that, let's say more funds or asset managers that understand the potential of EigenLayer, or essentially what they can earn with LRTs, let's say, will increase in adoption over time. I think it will. I don't know how long it'll take, but ETH as itself is just a great asset to have in your portfolio.
Yeah, I personally think in the next 5 years, we'll see like app chain everything trends where I think one big concern everyone might have is that STEs is so big, but it's secured by a multisig. And all the DeFi apps are honestly like dependent on a multisig, right? So the only way to make it economically viable, I think, is through EigenLayer, is then LST's protocols becoming an app chain itself. Because I think there is a great guideline from the Swiss regulator about staking, where they're basically saying, if I remember well, the main approach that they have is like a validator is like a custodian, and he needs to follow the same regulatory aspects, unless if there is a few exceptions. And one of these exceptions is like being a proof of stake system, being able to have an unbundling period and having a slashing mechanism. And yeah, basically, I'm like generalizing and simplifying a lot, but if you have basically slashing and true validators instead of a multisig, it's more likely, what we can say now from that basically guideline from the Swiss regulator, that you might eventually be able to escape some sort of custodian regulation, right? So the only way that is viable is through EigenLayer, and then every DeFi application will have to become some sort of app chain to be able to be compliant, and that's the only way they make it economically viable. Because if Lido is taking 10% fees on the e-staking rewards, they need to distribute half to the node operators. There is only half left. Is it enough to pay validators to secure all of this? It's not going to be able to acquire as much staked assets and trust than the amount of TVL it has, and only EigenLayer can, I think, at this stage, offer that kind of opportunity. Other opportunities is I don't think there will be like a monopoly of EigenLayer. There is also Babylon, knocking on the door with BTC and so on. So I think we'll see other type of restaking protocols happening where they will try to basically attract trust from Bitcoin and not only Ethereum. So yeah, I think that's how things might evolve.
Well, I do want to follow up on that and ask you, like, further down the line, what do you think the end game is? And it's just like a real quick, we talked about 5 years, we talked about how you guys look in the future, but like, what's the end goal for this space? Like, what are they really trying to achieve at the end of the day?
I personally believe that cryptocurrency is, I mean, the blockchain decentralized nature of it is a vortex for fiat. I think it's still the beginning stages. I think things like EigenLayer that help abstract away from the complexity of blockchain or decentralized trust are things that will increase adoption of the industry overall. Like Felipe said before, I mean, you don't need to be an engineer to launch your own rollup anymore. If you were to say that 5 or 6 years ago, I mean, that we wouldn't even talk about that. So the fact that that's even a thing now is very impressive. So a year from now, and then on top of whatever AI, if anything, is actually going to happen there, and it's not just vaporware. In addition to everything that's happening, I'm more excited about on the DeFi side and how that affects things. I think things will look pretty interesting.
Yeah, I think like one great prospect it will be to provide Ethereum-like security for any sizable, meaningful DeFi application is definitely something that will be very beneficial. Mostly, regulation is going to come at some point in the next few years. If we're really looking at the long term, it's definitely, not going to be okay to be securing billions with a multisig of 9 people that you don't even know and you don't know where they are. So, this is unavoidable, I think, and the only viable way to do it is really through, in my opinion so far, through restaking. So I think that will be a great ambition, right? All the big protocols having the possibility to have Ethereum-like security. Eventually, Bitcoin-like security might be desirable, but I see now only these two assets, right, that can pretend to be kind of safe havens, right, in terms of acquiring trust, and they have enough liquidity and they're big enough.
what do you think about like multi-chain, kind of like leveraging security from all different type of chains then? Do you guys think this is viable? You discuss like the benefits of like Ethereum and Bitcoin trust, but what about leveraging the trust from all these like different other chains?
I think you technically can with certain things. I mean, let's say as a DeFi user, you want to, I don't know, let's say bridge from Arbitrum or Optimism. I mean, there are certain things like Wormhole that allow you to leverage different blockchains, and you're leveraging them because you trust that the consensus of the mechanism works there. So we already live in this world, actually. You just don't know it really. I mean, we don't really talk about these things because that's very much like deep in the stack, let's say. But I mean, I think you can kind of quantify it with how much, let's say, volume is being bridged, and I mean, these are all different chains that we're using. So we're very much there.
Yeah, and I think the explosion of RAS protocols actually showed that and this is also a vision of Celestia, that the world is gonna be multi-chain, and technically every protocol is gonna have its own app chain, and there are stacks to build that right now with Caldera, Conduit, Gelato, etc. So let's see how it evolves.
Yeah, interoperability also of layer 2s, layer 3s, all of that will be also very important, in my opinion.
And in terms of like, let's say I'm someone that's looking to get into restaking. What are some of the, I guess, what are some of the things that I should be watching out besides the risk? Like, how do I determine where exactly to put my staked ETH or liquid staked ETH?
Okay, so when we were talking about risks, I believe there are three categories, which is like from the protocol side, the user side, and like external, let's say, regulatory. And I think when you are a user and it's not happening enough, we don't educate ourselves. So as users, I think not everyone knows that there are three types of LRTs, that each has a different risk profile. And we're just looking at numbers like the yield, the points, etc. So I think the majority of people should educate themselves more, and attending the panels like that, it's fine, but also reading the docs of each protocol they are gonna use. And that's why we also released an extensive report on staking and restaking, so you can understand each protocol better and the whole mechanism of restaking better.
Yeah, I think at this stage it's still so early, again, layer. So basically, it's not clear even for the LRT protocols themselves what type of AVS indirect exposure they want to have or not. It's still too early. So the only thing as a user you can do, I think, is really clearly understanding the three categories of LRT. I personally think it's maybe better to avoid the basket-based LRT just because you don't really get additional rewards for the additional counterparty risk that you have, unless if they change over time. And yeah, I think that the two ones that people should probably focus on is the native one. So if you believe, EtherFi is going to be, the next Lido, and you feel comfortable with that and you like it, I think that's completely fine. And if you want to continue to trust whatever LST you like and just trusting another protocol to do the restaking part on top of the LST of your choice, I think this is the most transparent approach that you can, benefit from. Then I think it's still too early to then discuss and see how effectively the risk mitigation mechanism every protocol will have. It's still a bit too early, in my opinion, to make the judgment. So only be familiar with the LRT type and make your choice if you want to participate in the LRT space.
Yeah, I don't have anything to add.
All right. So in terms of like how you guys are looking at the maybe the market today, the dynamics, do you guys see that there's more ABS than restakers? Like, do you guys see like there's a balance? Is there a balance at all, or is there like an imbalance?
Well, I think many people think that we got ahead of ourselves with restaking. I think there is definitely more restaking assets than, there is not even AVS rewards, right? This is all based on points. So, I think on the AVS side and restaking rewards and everything, it still needs to catch up, but that enthusiasm just is an acknowledgement that the market is expecting this to be very big. But I think right now, to be fairly honest, there is a big disproportion of many more restakers than actually, AVSs and protocols planning to consume these AVS services.
It's quite easy to restake. I mean, we build vaults for LRT protocols that make it even easier to do so. We have a vault for Calp where you can mint ETHX and then take ETHX to mint RSETH, and you do it all in one click. It's all done through smart contracts. So it's quite easy to restake. An AVS is sort of, if you're building something like hyper specialized, like a decentralized mempool or something like that. I mean, that's not something that you can like sell in one click, right? So it's they're the two different things, I would say.
Yeah, and I think the caps for restakers actually speak for themselves.
Got it, got it. All right. So, obviously, I think I wanted to just check in to see if you guys have anything additional to say about, maybe something that we didn't cover just yet. But if not, yeah, let me know.
Yeah, I personally think it's going to be very challenging and interesting how the AVS rewards will come. Will it be in native ETH? Will it be many tokens, many different like AVS tokens? How do you auto-compound it? Will LRT protocols aim to auto-compound or they will try to come up with different mechanisms? Because it's very challenging to auto-compound potentially 50 AVS rewards. So I think those are some of the active discussions happening with LRT protocols. And yeah, I think it just depends on maybe two things, like whether EigenLayer will develop something to make it easier to auto-compound that might influence your decision. Another option, it might be that ABSs, maybe they will just come up with a general consensus where they can attract more trust if they pay in ETH than if they pay in their own token. And maybe there will be then a market trend where everyone is going to try to have super friendly slashing policy and just paying ETH, because that's what allows you to attract probably the biggest amount of ETH restaked assets and the biggest amount of trust at the most capital efficient way. So I think those are questions still, that will be very interesting to see how this evolves eventually.
I mean, as someone that's helped LRT protocols like build their own vaults, I mean, point systems are very much used to incentivize or for like user acquisition. So I think in the short term, it's a bit concerning how that's all going to play out. But in the long run, if that's going to attract that many more, let's say, users, restakers, and if that system is essentially sticky, I think that's what's really exciting. So I think like in the short term, I'm kind of curious how it all plays out. In the long run, I think it's net positive.
Yeah, I would really like to finish with inviting you to read the report that we prepared. I think it's full of very useful knowledge and analysis of the LRT protocols right now in the market. So yeah, inviting you to redstone.finance to check it out.
All right. So hope you guys learned a lot about the space today. I want you to, thank you everyone for joining, and also the panelists for providing all these useful insights. Hope you guys learned a lot, and I'll have the host take it away.
Thank you.